Hi there, Tammy Burkhart. My video got chopped off, so this is part 2 of problem 4-1B. We had gotten all the way through the balance sheet. I just was saying that the assets equals liabilities plus equity, and now we're going to jump into finishing off the problem by doing the closing entries as well as the post-closing trial balance, which is what is new in chapter 4. So I wrote some notes. I've got closing entries here. The purpose of the closing entry is to zero out all your nominal accounts. So what is a nominal account? A nominal account is all your revenue, your expense, and your dividends. So basically everything on the income statement, right, revenue and expense, and then your dividends, which is found on the statement of stockholders' equity, those are all going to be zeroed out. Literally, the account is going to be zero when we're done with the closing entry. What's left over then is going to go on our post-closing trial balance. Our real accounts are assets, liabilities, and equity. And as you can see, all three of these accounts are on the balance sheet. So these are real accounts. These remain untouched. We're not going to do anything with those because they're real. They stay, these account names and dollar signs, until you do something to change them, until you do a transaction to change them. Where nominal accounts are closed out, they're zeroed out at the end of every period, in this case, at the end of the year. All right, so let's do it. We've got 2 journal entries. I listed them there. The first journal entry is to close out both the revenue and expense accounts. So we're going to do one journal entry. It's going to be a compound journal entry. It's going to be rather large. We're going to do one journal entry to close out both revenue and expense. All right, so fee revenue, let's start with that. In our fee revenue ledger account, we use T accounts, right? Debit on the left, credit on the right. For revenue, every time you earn revenue, you increase revenue, you credit that. So as we've gone through the year, right, we've had all these revenue account dollar amounts. And then at the end of the period, we have a total, in this case, of $283,750. We've got a credit balance of $283,750. You see that on the worksheet. We need to zero this out. So what do we need? If we have a credit for this amount, we need to debit this exact amount to make it zero. So in our closing entry, I'll use this for our closing entry, we're going to write fee revenue for a debit for $283,750. So there's our debit. So when we come back over here and post it to the ledger, right, transferring our journal entry to the ledger, now what do I have in this account? I have 0, right? I'm closing, so I'm zeroing it out. I'm going to close all of these accounts in the same one journal entry. I also have rent revenue. Rent revenue also has a credit balance. So because it had, credit balance. So because it has a credit balance, I'm going to then debit it, rent revenue, for $3,000. And that's all I have for revenue, just the 2. So those two revenues are now 0 because I have debits for them and they are sitting with a credit balance. Now I have 8 or 9 expense accounts. All of the expense accounts when incurred are all going to be on the debit side. And so if I'll give you an example of the first one, salaries and wages expense, that T account, that ledger account, so salaries and wages expense, that T account, right? So we've been paying our employees all year, right? Dollar amount after dollar amount. The total amount at the end of the year, in this case, is $147,000 on the debit side, right? Because every time I incur an expense, debit to incur the expense. So now, if I want to zero this out, I need a credit. So I'm going to use salaries and wages expense, and I'm going to have a credit for $147,000 here in my closing entry. So when I come over here, I've got a credit here. I'm going to transfer it here, 147, and now I have 0. So I'm going to do that with all of my expense accounts. I'm going to list them. So I've got advertising expense. That amount is $86,000. $6,800. I've got utility expense, $430. I've got travel expense for $18,750. I've got 2 depreciation expenses for $45.50 and $3,000. I've got supplies expense for $1,500. I've got insurance expense for $1,300. And last is miscellaneous expense for $58.75. So all of those ledger accounts, all of those T accounts are now, like this one, are going to be zero. Why? Because I have credited their totals here in my closing entry. Now, do my debits equal credits? No, they do not. My revenue does not equal my expense. If you had a net income, you would credit retained earnings for that. In this case, we have a net loss. So we actually have more credits than we do debits. So we need a debit to make this balance. So I'm going to come back in here and squeeze in retained earnings at the top. Retained earnings is going to be for that $12,025. So with these now 3 journal entries, now we equal. These debits equal these credits. And the retained earnings is kind of the catch-all. So if you need a debit to make it balance, then that means a net loss. If you need a credit, which is, I would say, more normal, then that's going to be net income. But wherever you need it, it really doesn't matter. You're going to make your debits and credits balance by using retained earnings. And that's the first one. We closed revenue and expense. Now we'll do the second one. The second one is dividends. So like expense ledgers, dividends, we had for $20,000 if you remember. And whether that was paid once in the year or maybe quarterly or 4 times, the total amount here was $20,000, right? We had $20,000 sitting in the dividends on the debit side like an expense. So I know I need a credit to dividends. So I come over here in my closing and I need a credit to dividends of $20,000. What's my debit going to be? Same thing here. Wherever you need retained earnings to be, that's where it goes. So we're going to debit retained earnings for the $20,000. Now I have a credit to dividends, and now my dividends account is 0. Okay? So through those 2 journal entries, one long compound one, right, for revenue and expense, and one a little bit more simple for dividends. That's how we close out our nominal accounts. Remember, the nominal accounts are the only ones that get closed, and that's revenue, expense, and dividends listed 1, 2, 3 here. All right, the only thing else we have in this chapter is our post-closing trial balance. The post-closing trial balance simply has the accounts where we have money in them. So the post-closing trial balance will look much like the balance sheet. Why? That's the only accounts we have left. We only have the real accounts. Now, it will be set up like any other trial balance. You'll have the name of the account here. You'll have debit on the left, credit on the right, and then you will total them up. And that's going to be your post-closing trial balance. So I just list them here just straight from the balance sheet. Debit of $5,100 for cash. Accounts receivable, $26,500. Prepaid insurance, $2,300. Supplies, $525. Better write smaller. Land, $80. All right, so now I have building. So the building amount is $340,000. That's a debit, right? Debit to increase the asset. That's $340,000 in land. But we have our contra account called accumulated depreciation, comma building. That is going to be taken away from, so that's going to be a credit. That $193,000 goes on the credit side. So you don't use parentheses when you're doing trial balances, right? You just put it on the credit side, and that means to take away from. All right, I also have the same thing going on for my equipment. Equipment was 140, and my accumulated depreciation equipment is 59. So those are my assets, right, listed in order of liquidity. And so now I'm just going to finish out with my liabilities. I've got 3. I've got accounts payable, salaries and wages payable, and unearned rent. Those are all liabilities, so they're all going to be on the credit side. I've got 9750, 1900, and 1500. Then all I have left is my equity accounts. So I've got common stock and retained earnings. Common stock is 90,000, also a credit, and retained earnings 239, 275. I'm sorry I don't have the totals for you. I didn't total those up, but this is the format. This is the purpose of the post-closing trial balance. It's basically to say, okay, here's the worksheet for the next year, starting July 1st, right? July 1st. These are all of the accounts that we have. These are their debit and credit balances, and now you start over. Start over earning revenue, start over earning expense, and you keep these real accounts here until you do a transaction that changes them. If you have any questions, of course, please email me or call me, text me. See you next time.